Welcome to Mortgage Chicks with Hot Tips. I'm Diana Harvey.
I'm Elizabeth Hole.
I'm Cindy Walker.
I'm Kim Hairsted.
And I'm Stacey Van Skank.
Today, we're going to talk about FHA. We're going to go over some of the basics. What is an FHA loan and why they're important, down payment, gift funds, and loan limits. We're also going to talk about mortgage insurance. Why would a buyer do an FHA over a conventional loan, appraisal differences, and then we're going to talk about some of the myths. So Stacey, can you tell us what is an FHA loan and why they're important?
FHA loans, FHA stands for Federal Housing Authority. And these loans were created in 1934 in the Great Depression to help instill the economy for people to buy homes. Before then, you would have to put 50% down and you had a 5-year term to pay the loan back and then it would balloon.
Whoa.
People could not afford to do that. So FHA is, it revolutionized home ownership. FHA loans, they insure the mortgage. So if a buyer goes into default on the loan, FHA is going to assure the validity of the loan. So this really helps people that don't have a lot of money to put down, don't want to have PMI, maybe have some credit challenges that I know everyone's going to go over. But FHA, you have to meet FHA guidelines for loans to be eligible. And some lenders do have overlays. That's additional layers of risk or additional guidelines that have to be followed for FHA loans. But all in all, they're wonderful loans and they really make a difference in people's lives, especially first-time home buyers.
Really do.
So Elizabeth, why don't you tell us about down payment?
Absolutely. Now, FHA, like we've been discussing, is geared more towards your first-time home buyers. So they do have loan limits. And in our Bay Area, for a single-family home, the FHA maximum loan limit is $356,362. However, they do allow you to buy duplexes and triplexes. So on a duplex, it's $456,275, and on a triplex, they'll allow you to go all the way up to $551,500. So these homes give you the ability not only to have a primary residence, but also to have a little bit of cash flow with those. FHA loans require 3.5% down as far as a down payment goes. So it's one of the smaller down payment programs that we have available. And the entirety of the down payment can be a gift. There are also some circumstances where you can do what's called a gift of equity, which would not only allow you to cover the down payment, but it would also allow you to cover all the closing costs. It's one of those loans that they allow you to assume or allow you to roll your equity over to a family member, something along those lines. So it opens up the door for more possibility for our first-time home buyers. Now, one of the things about mortgages that people don't like, especially with FHA, is mortgage insurance. Now, on an FHA loan, it's called MIP, versus on a conventional product, you'll hear it called PMI. But it is the same thing. And mortgage insurance on an FHA loan is not as credit score driven as it is in conventional. So what I mean by that is they can have good credit, but maybe not great credit. And the reason why we would choose to put them in an FHA loan, one of my reasons, would be the mortgage insurance. And I've given us an example here. On a conventional loan at a purchase price of $330,000, down payment of 3%, so that would be $9,900. Credit score of 640, so medium score, nothing terrible. Your mortgage insurance on a conventional loan would run $440.14 a month.
Wow.
Whoa,
Okay.
Daddy.
On the same scenario on an FHA loan, $330 purchase price, down payment while this goes up a touch to $11,500, your loan amount is $318,450. The mortgage insurance is $223.60 a month. So what does that mean? That
Much
means
better.
your buyer has $216.54 more buying power. So that can be $100,000 difference between the house. So with prices rising, this will allow our buyers to be able to buy more house than what they would have on a conventional product with just a little bit more money down. So you could see why we would drive a first-time home buyer more towards an FHA product rather than a conventional product. It would just make more sense. Now, and I know you're going to talk about this, some of the myths. One of the things about mortgage insurance is everybody thinks, oh, FHA, that means I'm forever with that mortgage insurance. That is not the case. In some situations, they will allow the mortgage insurance to fall off the loan after about 11 years if you up the down payment assistance. So, although mortgage insurance isn't one of the things we all love, FHA really did take into consideration to help buyers out there without the strongest credit, to give them more buying power and to put them in the market.
So, Elizabeth, basically, I mean, we're hearing the pros and cons going FHA versus conventional. And just to add on to that, I would say with FHA, we are allowed to go higher on the debt to income ratio. Conventional is pretty steadfast when we're trying to get somebody automated underwriting approved at 45%. I don't know if you girls agree, but it seems like
Absolutely.
we can't get anyone unless they've got a lot of money to put down and over 780 credit scores. It's hard to get someone approved, so we look at that. And another thing is it's a struggle on debt to income ratios less than mid sixes to get a conventional approval. So we try to get someone approved to conventional first, but if not, we always think FHA because number one, with a medium credit score, the interest rate is better going FHA. Not to mention the mortgage insurance is a lot cheaper, as Elizabeth went over. And with FHA, I'm not going to say in this market because it's such a seller's market out there right now, but we can get the seller to pay up to 60% towards the buyer's closing cost on a FHA loan, and conventional they're limited to 3% when they're putting low down payments. So those are some of the reasons that you would want a buyer to look at FHA versus conventional if they're tight on cash to close, if they have a less than average credit score, and if the seller is going to contribute to their closing costs. So debt to income ratio is when we look at a buyer and we take their total monthly obligations, their car payment, their credit cards, their student loans, any alimony or child support that they have to pay. We take that total figure and we divide it by their gross monthly income. So FHA has always been a lot more liberal on that, going up to about 50% with a decent credit score, whereas conventional is a lot more conservative.
So there's really no reason to be worried about an FHA loan versus a conventional loan. They're both very strong products.
Absolutely.
Absolutely. So there are some appraisal differences, though. Kim, why don't you tell us about those?
Okay, FHA has some guidelines that they put because the home has to be safe, secure, and soundness. So they want to make sure that these people going into a home with less money down, less money in their pocket, that they don't have large repairs to do. So minor repairs, normal wear and tear, those are okay. Inspections are required for an FHA loan. The appraiser comes out and they're not an inspector, but they can see maybe some wood rotting here, some paint peeling there, and those things they would mark and they would have to be inspected to make sure that the home didn't have termites or any roof leaks. So the important thing to remember is the plumbing has to be working correctly, the electrical has to be working correctly. The thing that really is crazy about Florida is they have to have heat. And the heat has to be attached. They don't care if you have air conditioning here. We're all going to die of heat stroke. But, we do have to have heat, and it can be a wall unit, but it still has to be wired directly. So you can't just have like floor heaters around. So they do have some restrictions on that. Peeling paint, houses that were built before 1978, the peeling paint could have lead in them, which could be a danger to their children or whatever. So if there's any peeling paint, they're going to want to get that scraped off and repainted and take it off of the ground or wherever, so there's no, paint chips anywhere. They used to be real strict about whether you had screens that were torn or you had, different things. Those are minor repairs now. So the water heater, the heat, and the roof having 5 years of life left on it is the most important things to keep you safe, secure, and sound in an FHA loan.
So Kim, can you get an FHA loan if there's no appliances in the house?
No, you have to have a stove.
Correct.
Yep.
That's the only
And a hot water
appliance.
heater.
Yep, that's the only.
Stove and a
thing
hot
you
water
need.
and a heater.
Well,
But
here.
no kitchen appliances, but a stove. So
But
you don't
if
have to
they're
have a
there,
refrigerator.
they need to work. So you could be in a kitchen with no refrigerator,
Right.
no microwave, but if they're there, they need to work.
Yes.
So get them out if they don't.
Yeah.
Okay, so let's review some of the myths about FHA. One of the things they talk about is FHA takes so much longer to close.
Not
Not
at
at
all.
all.
No.
At all.
Untrue.
Totally untrue. The other thing is lots of repairs. Well, Kim, you kind of talked about what some of the repairs are. And what's interesting is I think we're seeing a lot of repairs being needed just for insurance purposes.
Exactly.
Mostly they are.
So many sellers are now doing all of this stuff up front because they already know there could be issues with insurance. So that's one of the things I think that is a really big myth. Even though there can be more repairs with FHA, a lot of this is coming up just for insurance purposes.
Right.
Another thing is they think that buyers aren't solid buyers. Not true.
Not at all.
Not true. As a matter of fact, we just discussed some of the reasons why they might want to use FHA for more creative financing in their situation. So I think that's also another myth. And then the other thing, Elizabeth, you mentioned it, mortgage insurance doesn't always have to be for the entire life of the loan. So there's a lot of myths out there, a lot of things that people think they shouldn't go FHA when it's really not a bad product at all. It's a very good product.
Not at all. And one of the things that I like to bring up, because I've noticed, and I'm sure you guys have all noticed in this market, there seems to be a hesitancy
Very much
with
so.
government loans in general. And, you know, a lot of things that I hear is, well, it's an as-is contract, so we don't want to go FHA. Well, it doesn't matter if it's an as-is contract, whether it's conventional, FHA, USDA, VA. We don't offer as-is financing. So if there's a big roof leak and you walk in the house and there's a stain, I don't care what kind of loan you get. If there's appraisal involved in that, that's going to get flagged one way or the other. So, you know,
Yeah, and
listening.
like Diana said, it's
Right,
not necessarily
exactly.
us, it's the insurance
the insurance.
four-point
Right.
inspection.
Yeah.
Yeah, if the insurance won't insure that electrical box, or they won't insure that wiring, or that type of plumbing, it doesn't matter if it's FHA or conventional, they're not gonna insure it regardless.
Right, so that shouldn't just automatically make a buyer off the table just because we're working with a government loan. And that's what, you know, I think we were trying to show here today,
For sure.
that there is strength in FHA buyers.
So
Well, and I also feel FHA buyers, FHA is for a primary residence, right?
Yes.
It's not for a second home, it's not for investment. And I really, really, really wish the sellers out there and the real estate professionals would stop taking the FHA buyers out of consideration for purchasing a home. You're taking away almost half of your buyer pool. And you
Sad.
could actually make more money and get a better offer. But the other thing that kind of sits at my heartstrings is, wouldn't you rather sell your house to someone who's going to occupy it, have pride and joy in it, live there, raise their family, or retire, instead of selling your home to an investor that's going to turn around and rent it out to someone else at an ungodly amount of rent and draw the,
Or
the
tear it
neighborhood
down.
Yeah.
or make it an Airbnb.
Yeah.
Sell the house to a first-time home buyer, sell the house to someone that's going to occupy the property instead of an investor. I wish more people would do that.
Amen.
And sellers also need to understand that there are some FHA products, if your house isn't absolutely perfect, that will allow us to do repairs. They're a
There
little
is.
bit more complicated, but they really seem to have their thumb on the pulse of what that first-time home buyer may actually need, because they may not be able to have the walk-in ready house. So the ability to be a little more flexible with their credit, a little more flexible with their down payment, options to help improve the house. It's not a bad thing.
So we've talked about the fact that FHA loans allow people to get in with a lower down payment, easier credit qualifying, lower interest rates, seller contributions are higher, and we can be more creative with financing,
And more buying power a lot of times.
more buying power.
For sure.
So it's a great loan. People need to be more open-minded.
Reach out if you've got questions. That's what
Call
we're here
us.
for. Please
Yeah,
do
we're here to
reach
help.
out. Call the mortgage chicks. We've all done tons
Tons
of FHA loans.
And of course, you can always send those questions to mortgagechicks@vandykemortgage.com. Okay, so let's stay open-minded to FHA financing and stay tuned for more information from the Mortgage Chicks.
Well, hello everyone. There's been an update since the filming of this episode. FHA has just announced
that as of January 1st, 2022, they will be increasing their loan limits also. So, for a single unit property, the new loan limit is $420,680. For a 2-unit property, $538,650. For a 3-unit property, $651,050. And for a 4-unit property, $809,150. So those are your new FHA loan limits for the year 2022. Thanks for watching and stay tuned.